Welcome back, folks. Let's go to Mark in Bedford. What's going on, brother?
Not much. How you guys doing?
Morning, Mark.
Doing great, man. So, hey, what's the weather like up there? Is it beautiful?
Welcome to Volatile Tuesday, right?
Yes, welcome to Volatile Tuesday.
That's for sure. I heard it's cold. I heard yesterday.
The weather up here, it's cloudy and cool. It's in the 40s.
40s.
In the 40s,
I heard it was
okay.
33 yesterday morning. So
Really?
I know.
Oh,
Early.
my God.
Yeah, it's fall is coming. All the trees are turning. The leaves are falling. So
Okay.
tis the season, I guess.
Tis the season. About time, I guess.
Yeah, exactly. Hey, I know you're talking to Paul in the last call about the SPY, but I had a question for you guys. Is this market just deviant enough that it could turn around at that 230 or 3 and go and erase a lot of, if not all of this gain loss and go back up?
Sure. And that's what the bulls are, waiting for. Yeah.
Okay, because the way you painted it, Tom, I said to myself, well, gee, it doesn't sound like there'll be any balance. But one of the things you've always taught me, Tom, is this market is energy, and if you have all this energy comes forcing it down, there's got to be Einstein's what's Einstein's theory of relativity? You got to have the opposite reaction at some point.
Equal and opposite reaction.
Yeah.
Sure.
Well, what you want
exactly.
to keep an eye on for the next few hours, right? And the way to do this, folks, you can go over to Yahoo and do this, or it's on your platform. You want to keep an eye on Europe, okay? Europe hasn't bounced at all, and if Europe doesn't bounce, the probability is pretty good that we're going to stay down. And where my head's going is that because we've been in such a market for so long that every bounce, has been bought and the bulls have made money, your probability goes a lot higher that, we're in a different deal.
And it is remarkable. We got the year-to-dates up there, right? You're literally at barely any ticks now in the Dow. You're talking about year-to-date up 0.1%, S&P 0.4%, and the NASDAQ, which has been a leader in so many ways, the likes. It's still in positive, but pretty remarkable. We're at the end of October, and the market's now basically flat outside of the
That's
NASDAQ.
wild, man.
Yeah, and when you look at, the NASDAQ, talk about an outlier. We have Europe up here, Mark. We have Asia. You're talking about big numbers on a yearly basis coming into the end of October. Double digits all across Europe.
Down.
Yes,
Double digits down.
Double digits all across Asia as well, and we've just given back a tremendous amount of those gains, and we'll see if the NASDAQ can hold in on a day that the NASDAQ's down 2.4% already.
And it's a one-world market, man. People don't, I don't know. Some people understand that, other people don't. But that's money. The money is so large these days, that it goes all over the borders like in about 2 seconds, so.
Well, not only that, Tom, but a lot of people think the market is from 9:30 to 4. But, I do a lot of my buying and selling pre and post market. And that's one of the things that you've always said, too. Don't count this market as pre and post. It's a lot of money to be made and lost, pre and post market.
We saw
you get those NASDAQ numbers that come out of 405, and those NASDAQ stocks go up $5, $10, or down $5 or $10 sometimes.
Right now, what to do is also keep your eye on the bonds, because the bonds have been telling us for a long time, right, that people are buying them. Okay. And we know that the Fed's going up, and that's counterintuitive. And I've always learned, and when I first started trading, we used to trade just off ticks, because it used to be so basically correlated that if the 30-year bond would be going up 1 or 2 ticks, the market would react to that. Now, that's changed over the course of years, but what hasn't changed is that when bonds are going up, bottom line market normally is either flat or having a problem. And the other one would be, okay, what's the utility? We brought this up yesterday. The utility ETF. Can someone give me that utility ETF in the den? I forgot the symbol. But where do you see this? The utility ETF, folks, okay, is almost at all-time highs. That makes absolutely 0 sense because thank you, Basil, appreciate it, man. XLU, when you see this is a mind blower, folks, okay? Utilities the XLU is at 54.18. Now, inside of this, these are all the power companies, right? People do not buy power companies when the market's going up. People buy power companies for the interest rate structure, and we're at highs. So it's like, okay, man, it's just not the bond market. Well, we're right. It's not the bond market. You know what I'm saying? It's like people are worried that they just want an interest rate to get their money back versus making money. And, you know, when you do that, bottom line is that your probability just goes higher that, you know, there's less money that's going in the marketplace, more money that's saying, okay, just give me my money back, which totally makes sense, by the way, you know.
Yeah, we've gone up tremendously
So I
since.
have another question for you.
Yes.
If bonds continue to go up, how will that affect interest rates? Will that interest rates on mortgages? What I'm thinking.
They go down.
Will they start to-
They've gone down dramatically already. Yeah, they go down.
Yeah.
And that's what it looks like is
Right.
going to happen. You know, what would end up happening is just as when Kevin Hinks was on, you heard what he's saying about the Fed, that there's going to be 8 Fed speakers this week, evidently, okay?
Yeah.
And they, you know, they won't do it yet, but if this market keeps going south, they will reverse course, and they'll let people know ASAP, well, okay, we're going to back off the rates. They have to back off the rates because the bottom line, they can't crash the market. You know, that's, for the amount of work that they already did, and bringing everything back, they're not going to crash the market. You know, they'll ease it down. You know, and when I say ease it down, you know what my take is. Where that February 9th low, man, you know, we could bring up stock after stock. There's a lot of them there. I think the S&P's going there, and that's still another 150 points lower. But guess what? That sounded outrageous.
Tom, Larry was saying the same thing on his show this morning too.
Yeah, well, you know, I mean,
Yeah.
you know, the cool thing, you see, to me, the cool thing there, that would just be a monster consolidation. But if you have a 400-point consolidation, we stay there in that for a year, market gets used to it, and then we go from there.
And hey, you might not have to wait too long, Mark. We're up 115 points off the low, maybe since even you just called. So Dow's down only 384 now.
Right.
We're down 500 pretty close,
Right.
S&P. So we're getting a little bit of a bounce.
There's that energy, right, Tom?
We'll see what happens.
You come down with all that energy, and something has to give. All right, guys. Hey, you know, I may be coming down to Florida in January or February. I'll let you know if I do. If I do, I'll poke my nose in and say hello.
Oh, you got to come visit us.
And that's a beautiful time to be down here.
And you should see, we're in a beautiful place in St. Pete. We're right downtown St. Pete, man. Overlooking the water.
Well,
Forget it, man.
I would love to see your new office. So
Yeah.
I'm hoping to come down there in January and February. Probably more February than January, but I'll let you know before.
That's
that.
a beautiful
good.
month to be
All
here,
right,
man.
cooking guys.
We want all
Thanks,
you
Mark.
tourists down here. We want all that tourist money. Get it down here. We want it down here quick.
Happy trading.
You too, man. Have a great one. Have a safe one.
You too, Tom.
Thanks.
Bye-bye.